Tolu, good morning. With the increase in rate, hike in home prices, and crazy competitions, how do you invest in 2022 without getting burnt? What to or not to do at the moment if planning to buy now? Well, I think that's a fantastic question. So, increasing rates, yes, it'll have an effect. It'll have some type of impact on the industry, right? However, I would say if we zoom out and we look, I'm not a savant on interest rates or economies or any of that. But I would say that if you look at the historic averages of interest rates, even with the speculative 1% increase, we are still going to be on the lower end of those average interest rates. So 5% is still a very low rate to get on a long-term loan. If you compare interest rates to inflation, on average, the rates of inflation are about 3.22% per year. And that is a statistic that I learned before they started printing a lot of money, to ease whatever. So if you look at the published data for interests or inflation at the moment, then it's at like 7.5%, somewhere in there. So if that's the case, if you look at it like that, then any loan that you get under 7 to 7.5% for this year at least would truly be like getting free money handed to you if you can still get a loan for 4%. Because if inflation continues to be around the 7% mark for 2 or 3 years, then essentially each time you are, paying off any of the interests, then it is at a lesser amount than you borrowed. Tomorrow's dollars will be more abundant, but less valuable than yesterday's dollars at 7%. So, 7%, you take $100 and then add 7% inflation to it, now you're at $93. So of actual value. So generally, low interest rates like this are still fantastic for real estate. You're also, going to see more, rising home values because it's significantly easier to print dollars than it is to build houses, right? So we're still seeing a rise in labor costs, a rise in material costs. When I first started, $25,000 would rehab an entire home: new kitchen, new bathroom, paint, flooring. Sometimes even new mechanicals and roof would fit in that $25,000. Now, we've got a few projects where we are about to cross that $50,000 mark for full rehabs of the same house, right? So those have doubled. So I don't foresee personally, with rising labor rates, with the low inventory of homes available, even if the interest rates go up more, I don't see the housing prices going down at all. I think it's a really strong market. That's how I feel about that. And then as far as strategies go, I would say, constantly with all of the inflation going on, I would say getting your money outside of the financial instruments, outside of things that are dependent on the financial system, getting your money out of that and into assets is one of the best things that you could possibly do, because it's harder to build homes, it's harder to build businesses than it is to print the currency. So getting your money into businesses, not via the stock market or anything, but like local businesses, helping build those, starting some yourself, buying rental properties, I think that is really valuable. What are things that you can collect that have value outside of the dollar? I think that's smart. Whatever that is, I think you should probably do that. I would say not making a big deal in your head about rising interest rates, knowing that you're still on the low end. I would say go ahead and figure out, with your existing business model, with the rate that you're currently able to buy homes, with how much money you need to put down, what is the highest interest rate that your existing business model can tolerate, and then know that number. So it's been a while since I have done that myself, but last time we did it, it would be like 8.5%. So we know that if we can continue buying homes and get long-term loans in place for less than 8.5%, then we're still going to be okay. And then if interest rates go above 8.5%, then we're going to have to start focusing on something else, start pivoting in some kind of way, and kind of be agile and figure out what are the voids in the market, what are the niches that we can dive into to remain profitable and continue going ahead. And I would just say, if you see that your current business model, that your current strategies aren't working, figure out in some way how you can adjust. Because one of the benefits of being a small business, of being an entrepreneur, is that unlike the government, unlike large corporations, you are agile, you are nimble, you are able to see that something does not work and stop it immediately and start doing something else that does in fact work. So I don't know what those are, because I'm not there yet. We're not there yet. I think as a market, we're not there yet. I think it's good to be thinking about. I don't think it's something to be good that you should be worrying about. But I do think that it's something that if you've got some mental free time, then definitely plan for it and figure out what you can do. If you forecast out what you're saying, competitive markets, higher prices, higher interest rates. So the higher interest rates would mean that the buyer pool shrinks. The housing market, if it continues to increase with those interest rates, then that means you're going to need to be more cash. That's going to need more cash. So that's going to shrink the buying pool again. So it's safe to assume that most people won't be able to buy homes, right? So how can you service there? If you can get some rentals, sure. Maybe short-term rentals is something that you should explore. Maybe again, there's so many different avenues of real estate investing. So maybe long-term nurses would be something. I know our pilots. I know these people need places to stay for long term, like 6 months. Still shorter than a normal lease, but longer than a short-term rental. So figuring out how to take your current assets and get additional dollars out of them. I think that would be a good idea. And just brainstorming in that regard. I think it's probably going to look different for everybody. Going back to the fact that there's just as many different ways to make money in real estate investing as there are people investing in real estate. So thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.